This is Matt Russell from the FX Power Course, and welcome to the DailyFX walkthrough.
So here are the four pairs that I will be discussing this evening: the Euro Pound, the Aussie Kiwi, the Pound Swiss, and the Euro Swiss. So let's go ahead and pull up the charts. The first chart is the Euro Pound. If you recall, during yesterday's report, I added a simple resistance line to the pair. I also mentioned how there wasn't really any favorable risk-reward entries at this point. Moving forward now, actually during yesterday's session, prices left behind a long wick to the upside. That would be this candle right here. It also, that wick was right near the previous low, near the 85.65 area. So right now, moving forward, and the high of this wick, let me zoom in a little bit to get you a better view of what I'm speaking about, just in case you can't see it clearly at home. So the high of this long wick right here is about the 86 area. So moving forward now, we might use that as a reference point. We might look for short trades, placing our stop just a few pips above that 86 figure. Moving forward, personally, I don't like this this trade in terms of confidence. Confidence is low, so if my confidence is low, I'm going to require a more favorable risk-reward ratio when I do enter the trade, and that would mean an entry very close to that 86 figure. The next chart is the Aussie Kiwi, and not much has changed here. Still a little confused as to exactly where to place the support line. I've kind of decided to just simply connect all the previous lows. That would be these 4 points right here, and we can see the prices right now are still holding support. There has not been a close beneath the support level, although prices right now are hovering just beneath this support level. So I'd give it another 24 hours or so, see how this line holds up, but certainly this is the level that I'm looking at, and I would have a slight bullish bias against this line. Of course, that would be nullified with a close beneath this support line. The next chart is the Pound Swiss, and if you recall during yesterday's report, let me zoom out a little bit here, give you the longer term levels. This is a longer term support line that I'm looking for prices to return to. Prices are about 700 pips above that line, so it's not really relevant for the next day or so. So I mentioned during yesterday's report there was a bearish engulfing pattern. That was this candlestick right here, and how we might look to get an entry maybe up close to the high of that candle, placing our stop just above it. However, prices did leave behind a long wick. This is a hammer candle actually. So moving forward now, I'd abandon this trade idea. If you did enter, placing your stop up there, I would just exit this trade wherever you are, a little bit of profit, a little bit of loss, and just wait for another opportunity to develop in this pair. There are just too many conflicting candlestick patterns. We have the bearish engulfing and then the hammer candle right after that. So the environment's a little too confusing right now to set up any favorable risk-reward entries, so I would just pass on this trade for now, but certainly keep it up on the radar screen. The next chart is the Euro Swiss, and we have a little bit of a rally during yesterday's session, making a run to that 52 level, which is where the longer term resistance line is located, a little more likely, and right now prices are just about 100 pips away from that longer term resistance line. So over the next 24 to 48 hours, I would wait for prices to come up, test that resistance line, and again place our stop about 50 to 75 pips above that resistance line. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.